Hey, my name is MartiniRita. I invest for a living. I have an educational background in derivative pricing and engineering. So I'm going to disclaimer myself because you should not be doing these trades. I am not a licensed financial advisor. Past results don't mean future results. They're not a guarantee, and you alone are responsible for your actions. All right. So I'm going to talk to you today about Tesla getting included in the S&P 500. What that means and why it's important. So in an act of collective stupidity or brilliance, Tesla is now going to be included in arguably the most famous index in the world. It could be the mother of all events because of its size and its popularity. Everyone's starting to understand and know what a Tesla is. Elon's 4 million followers on Twitter has ensured that. So with that, what is an index? An index is just a collection of stocks that have certain attributes that are all put together. It could be my index. It could be a shit index. Okay, so let's show you what that would look like. So here you can send poop to somebody in the mail. And if we were going to create the poop mail index and we wanted to track the price of that, maybe we would do it by the biggest craps. So let's start with elephant crap would be sorted by the biggest weight. Then you would have gorilla poop, maybe some cow dung, then maybe some dog shit, and then some cat shit. It would be great. So now we're going to talk about the S&P 500. It's actually sorted by the largest, by the market cap. So the market cap is just an indication of how big the company is. It is just the price times the total share count, and it tells you how big the company is. For example, Apple is the biggest company in the index. In my previous video, I'm going to depend that it's up here, we talked about Tesla and their inclusion and the 20-day run-up. So take the inclusion date, subtract 20 days, go to the announcement date, and that is kind of the run-up that we were talking about. But the event is now here, and we need to talk about what's going to happen closer to the date. As we're nearing the date of the Tesla inclusion, which happens on Monday, so that's December 21st, I've taken some time to study what has happened historically. If you take the inclusion date and backtrack 3 days, it is going to have a run-up all the way to the inclusion date. Now, the inclusion date is a bigger pop. After the inclusion date, supposedly, there are negative abnormal returns. So we could especially see some down movement. Now, quad witching is on Friday. That is a big event for SPY and contracts. So it's basically when a bunch of simultaneous contracts expire on that date. We usually see some down movement afterwards. Volatility during the week, there's not really an indication of up or down, but you should see a lot of movement. That's what volatility means. Now, as we near those dates, what do we do when it's closer to the inclusion? Now, I kind of found out that you can go see if these indexes are actually going to buy Tesla. So that's kind of the thing too. If you want to complicate your life, an index actually doesn't buy stocks. Usually a fund tracks it. And so what happens is a manager needs to reduce tracking error because their objective is not necessarily the best performance, but the least tracking error. So let's go look at that now. Okay, so I have gone to iShares S&P 500. It is IVV is the ticker. It is one of the larger S&P funds. I have not gone to SPY, which is probably the most popular one. It's very liquid because I didn't really see the cool thing that I'm about to show you. So if you go hit portfolio and you go down to holdings, okay, here it is. I've already pulled it up and kind of taken it from a CSV to an Excel file. But if you look here, you'll see that cash has already been reserved in the amount of $727 million to buy Tesla. You can see that it's not actually Tesla because it says cash and or derivatives. Now, I tried to find a a person who understands institutional trading, and they said that they might not be buying all at once. A trading desk or an institutional desk may reserve those shares, knowing that a fund is going to come and ask for that many shares. And since there's $114 billion, or I think it's, 114 billion. I kept saying 14 billion in the previous video, but it's really 114 by my calculations. So that's a ton of money that's going to be bought up. And if you know that someone is going to buy something, then what you'll see happen is speculators come out there and try to pick up the shares in front of them. It's called front running. As always, I love reading your comments. I love to see your feedback. I have a live stream. I'm live streaming every day for the next 2 weeks because there's just way too much going on with the end of the year. We have a live portfolio, so I have skin in the game, and for better or for worse, we get to observe the process of investing. Links are down below to my Discord, to my socials. Come hang out, come share knowledge and information. I love that. Thanks again for watching, and we'll see you in the next one.